the markets got a little soft overnight when Bernanke showed up on 60 Minutes talking about job growth and inflation. This morning, the S&P was down about 3.5 to 4 handles before we came to the trading floor, and we opened a little lower, and then we rallied back to unchanged. Really, there's not a lot to talk about here. The markets are very quiet. Over in the bonds, over in the interest rate area, and the interest rate options, over in the grains. The metals seem to be active today. I think the gold was up almost nearly $20. But over a lot of these other markets, things are pretty quiet, and we suspect that they're going to remain that way. And part of that has to do with, one, we didn't have any economic releases before we opened up this morning, and the other part is that we're going into the December rollover. Now, the December rollover is a time that many traders believe that the markets will makes it a little harder to trade in an environment that's already hard to trade. So there's a tendency for traders to cut back, not increase their size during this period. Now, the S&P spread itself this morning traded negative. It's trading negative 510 at negative 505. Again, it's inverted because of the interest rates. And as we go into this, we're suspecting that the spread itself will widen out a little bit as the buyers come in. But really, to tell you the truth, the markets are extremely quiet. They're still holding, and we have a feeling that we could see one of those late afternoon shots again where the S&P remains a little weak and then firms up into the latter parts of the day as we go into the imbalance and into the 3 o'clock cash close. But up to this point, we've only got about 2,500 big S&Ps traded, and when you take out the Globex volumes of about 250, we've got right around 800,000 traded. That means we've only got about 550,000 traded, and that's at 11:15 Chicago time. We'd like to give you a little bit more to chew on. There's not much going on, and we'll be back tomorrow with another update.